everyone, and welcome to the Propcast. My name is Louisa Dickens, co-founder of Ella Re and board director of the UKPA, and I shall be your weekly host. Each week for 30 minutes, we'll be connecting the VCs, PropTech startups, and real estate professionals globally, and assist in bridging that famous communication gap we all love talking about. So sit back, relax, and enjoy the show. Hi, everyone, and welcome back to the Propcast. On today's show, we are fortunate enough to be joined by Nikolas, Samios, the managing director of PropTech One Ventures. So welcome, Nikolas.
Hi, Louisa. So thanks for having me on your show.
Pleasure to have you. Today, we'll be looking at the effect of Corona on PropTech. It's a topic which everyone has been talking about. And Nikolas has put a white paper together, which sort of, I guess, goes into it in a lot more detail and depth, and will give some great insights into the effect. But before we do that, let me introduce our special guest and obviously PropTech One Ventures. So PropTech One Ventures is the first dedicated venture capital fund addressing the untapped potential of real estate industry innovation in Europe, bringing together leading real estate companies and entrepreneurs, serial entrepreneurs from the digital sector and venture capital experts. In this role, as well as his previous entrepreneurial activities, he, for example, is managing director of the VC family office Cooperativa, and as managing director of Brandenburg Ventures, the VC vehicle of MP3 inventor Karl-Heinz Brandenburg. He has participated in more than, God, how many transactions is it, Nikolas?
It's at least 100, maybe it's even 200 today.
That's crazy, on both sides of the table. Now, Nikolas is a proven expert in venture capital methodology with publications such as the Standard Reference Book, Deal Terms VT, and many other professional articles. So Nikolas at the end will be sort of sharing with how you can sort of get in touch and I guess learn more. But I guess, the most recent publication you've done is the white paper you did on PropTech and the Corona effect, which sort of looks at the impact of COVID on digitalization trends in the real estate industry. Can you tell us a little bit more about, give us a sort of brief outline to it, how you conducted the research, how did you get the data? I mean, you put it together pretty quickly and it gives so much information. So I'd love to hear a little bit more about that from you.
Absolutely. So basically, we published our publication in February this year. So let's say kind of pre-Corona, at least if you look at it from the European perspective, on the large PropTech trends for 2020, 2021 to watch and the European growing PropTech construction tech ecosystem. And we felt that 2 months later, it was really necessary to take a look again because of the special impact, of course, Corona and COVID-19 has on pretty much every business around. If these trends that we kind of identified to be interesting for an investor, but also, of course, for entrepreneurs and real estate professionals, if these trends are still intact or if there is any change, if we need kind of to re-evaluate things. Yeah. Plus, of course, we had a lot of discussions also in our portfolio companies and with fellow entrepreneurs and fellow investors, how this special situation will impact, let's say, kind of financing rounds. Yeah. So will there be the nuclear winter or will it still be possible to raise equity for your company? Things like that. So a lot of questions, a lot of kind of uncertainty. And we tried our best to aggregate kind of knowledge and impressions from other investors, our LPs, startups, of course, et cetera, pp. And then try to aggregate it, let's say use a little bit of crystal ball plus some methodology, but of course it's a mixture of art and science at the end of the day, and put that down in a paper, and we published that beginning of, what was it?
Is it May time?
Yeah, exactly, beginning of May. So it was something like, let's say, six weeks into the real pandemic situation in Europe. So still, let's say, pretty early, but a little bit later than, if you just do something like 2 weeks after the first shutdown, and if you just do a marketing statement like, this is the greatest digitization accelerator on planet Earth, we felt that is maybe too naive, right? So we wanted to distill a little bit more, aggregate some data, do kind of, look at it from both sides at the end of the day. So what is the positives, but of course also what is the negative part of it?
Yeah, I guess being more of a realist. For the listeners who haven't yet read it and will be sharing with how you can read this white paper. You mentioned 4 phases of the pandemic. Can you please sort of talk us through these and I guess how we sort of, certain effects they had on, say, the industry as well?
Right. So we said that, so we tried kind of to structure it. Yeah. So we're always kind of, let's say, the analyst guys that try to get a little bit of structure into chaos. So it's basically describing working with startups at the end of the day. So the first phase, we called it kind of the panic phase. So of course, for obvious reasons, February, March this year was a mess. Yeah. So nobody really knew what happened. Everybody maybe was looking at the drastic pictures you saw from northern Italy, for example, where people had to be sent away from the hospitals. And we are in Germany, we're not far away from that. So it's only like 200 kilometers away. So we, of course, were afraid that this situation would come to let's say, the German-speaking markets like 2-3 weeks afterwards. And so this is why we also kind of rang the alarm bell and said, okay, something big is coming. Yeah. So this is a massive wave. This will hit everybody. You have to be aware. What does it really mean for the future? Difficult to tell in that first kind of panic phase. Yeah. So this is also why we believe that in that phase, a lot of investors just pressed pause. Yeah. So because that is the first obvious reaction you can do in times really happening. Yeah. And so, of course, if somebody tried to close a financing round in that very first phase, it was very difficult. So suddenly you had deals kind of breaking up last minute, which is usually not the case in the venture capital environment. So if you have a term sheet, if you're doing due diligence, you usually have quite a good certainty that the deal also will be executed. But that was completely different. Yeah? So that was phase number 1, so kind of the dark days. Then let's say starting maybe April to May 2020, so always speaking of Europe, so it might be different in some other areas around the globe where the wave hit later. But April to May, the lockdown phase kind of started. Or to stay in the picture of the hammer and the dance, so that famous model that I think most of you will know. So the governments acted. Yeah, we had different levels of shutdown, of lockdown, of travel restrictions throughout Europe. And of course, in that phase, startups had to find new ways, for example, to do their B2B sales work. Yeah. Because suddenly it was not really possible to kind of travel to the customers. And we all know that the real estate industry is pretty old school. So usually a sales process involves driving to the customer or flying to the customer 5 times to get a signature for a contract. So that had to be changed. Yeah. So on top of the market uncertainty, you had a real logistics challenge suddenly, because your customer didn't really know if it is kind of possible for them, also whatever governance security wise, to do deals over Zoom conferences, stuff like that. Yeah, so that's not far away in the past. That was pretty new. So I think today it's standard. The third phase we call the transition phase. So starting from roughly May 2020, we saw that kind of the system adopted. So society, governments, business kind of adopted to the new situation I would say pretty fast, also faster than a lot of people anticipated when the wave first hit. So I would say a lot of industries then, of course, kind of said, so we have to do business right now. We cannot stop long-term wise. Yeah? It's just possible. It's too expensive. We have to adopt. We have to do something. And this is maybe the situation where also some of the positive statements from like the Microsoft CEO and so on are true, that this was kind of really accelerating digitization in the mindsets of business leaders. So maybe like 5 years in 5 weeks or something like that. Yeah. So it was suddenly possible to do a sales meeting over Zoom. It was suddenly possible to do even due diligence processes for investors without physically meeting the team. Yeah, which usually is a no-go, at least in more conservative markets. So that was kind of the transition part, and we're still pretty much in the transition phase. So we're not done, of course. Yeah. So the crazy Russians now have the first vaccine. So let's see when there will be a real one. But we think that kind of mid-end 21 is kind of the time frame to look at for getting into the new normal. And it's a step-by-step thing. But currently we see that there is a lot less uncertainty in the markets. So people now feel kind of comfortable, more or less, with where they are. So the beginning, the panic mode was completely the opposite, complete pause, no investment decision anymore. But I think we are now in a phase, at least in Europe, where it's pretty much, it's not, business as usual, but it's getting into the new normal. And this is something where you can live in. This is something where you can work with. It's something where you also can start again to have a certain certainty that a transaction, for example, then also is closed and signed and closed. If you have a term sheet and stuff like that. So this is roughly how we structured that. Of course, we're not done, but I think right now it's much easier to predict kind of what happens in the next couple of months than it was beginning of the year.
And I guess if we start looking at direct factors that sort of Corona, which have affected sort of prop tech trends. I mean, there've been varied trends which have come up over the past 5 years since prop tech has really sort of grown. What would you say the main factors are?
So of course, what you try to do is kind of reassess the main trends that we already saw kind of before, and that I guess everybody knows, and to try to assess how these trends are impacted short-term wise and mid-term wise and let's say long-term wise. And let's say for obvious reasons, so everything that is kind of close to hospitality, everything that has a travel-related element is heavily impacted short-term wise, right? So that's obvious. But for example, the interesting question is, if you look at a segment where we're heavily invested in, which is, let's say, the boring back-end IT, process IT stuff you need to run a large enterprise. So if you're an asset manager, how you're managing your assets, how you're managing customer relationships, the ERP, CRM, whatsoever, document management stuff. So in that area, for example, being able, if you have a digital file, if you have a digital process, if that's even cloud-based, you are productivity-wise in a good position if you have a work from home or kind of hybrid situation. People can work in this situation because you have your basic IT stuff sorted out. So that sounds obvious, but for a lot of large real estate companies, it's still not obvious. So they still might have kind of the old legacy IT approach. They hastily had to buy VPN licenses and whatsoever and get laptops for their people and stuff. So from the startup perspective, this almost sounds kind of like a joke, but it's still reality with a lot of the old industry players. And so these are things where, of course, enabling them to do business in a 1-2 year transition phase. And then maybe, so we don't know yet, but maybe also long-term wise, we have more work from home hybrid situations. So that sounds like something that the market now needs and that startups, of course, can deliver. So this, for example, is a segment where we are, let's say, bullish, both short-term and long-term wise. And then maybe last but not least, there are also segments that directly kind of get a push out of the Corona situation. So if you think about, for example, regulation around the workplace, if you think about how you have to operate a large office tower, suddenly you have a lot of kind of, let's call distancing, medical hygienic things that you have to consider, that are pretty new, because that was usually not your main problem. And so, for example, if you have deployed or if you're now deploying kind of, let's say, IoT app-based track and trace capability in your office, you are in a good position because if on floor 10 you have a new COVID-19 case, and that will happen, so that's statistically it will happen. You can, if you have the track and trace capability deployed, you can say it's just a matter of floor 10, whatever, segment B, and you just have to send home 20 people into quarantine. If you don't have that, maybe you need to send home 1,000 people, which productivity-wise, of course, is a disaster. So these are things where existing technology, so that's not rocket science, but existing technology that maybe has not been deployed before now has kind of a killer use case right now. And so that maybe also gets an accelerator from new market opportunities that directly are a result of the Corona, COVID-19 kind of lockdown, new normal situation.
Yeah, and I guess Earlier, when you were sort of going through the phases, we I guess spoke about obviously the new norm and being able to, I guess, look back at investing. What were the sort of effects, I guess, on the whole sort of startup financing situation? I guess personally from you as well, when this pandemic hit, I guess, how did your business react and how do you foresee, I guess, are you sort of picking up with investments? I've got clients who had it sort of taken from them, but then I've got other clients who, they secured and they're still getting it because they're proof of product. What do you think the effects have been on the startup investing space?
Yeah. So that's, of course, a very good question, not just because we are investing, but also, of course, our portfolio companies need to acquire new funds, not just from us, but also from outside investors. So of course, that question was dominant, from day one. And of course, in the first weeks, everybody was afraid. So what you do, kind of, the main reaction is cash is king, right? So you try to optimize kind of your cash flow. And we had quite, in most countries where we're active, there was quite some options also from kind of government support programs to get additional liquidity or to go to something like let's say a short work system where your people are just working 50% but get kind of 80% of their salary with government support money, stuff like that. So that was deployed quite quickly. But for example, we as, let's say, board members in the startups where we are invested in, we had to support the usually, let's say, young entrepreneurs that maybe for the first time are now in these kind of crisis situations. So maybe, kind of, let's say, a cliche, but maybe true. They graduated from a business school, and the last 5 years was just growth. Growth. And now for the first time, they are really in such a situation where they really have to make a very tough decision and use tools that they also haven't used before. And so I think it's totally naturally that any venture capitalist or everybody with a portfolio in startups, for the first couple of weeks, all his time was completely eaten up by kind of helping the existing portfolio, assessing the damage, organizing third-party funding, and so on and so forth. So regardless if your strategy was, and I don't know if it's wise to make a strategy like in week 2 of the pandemic, right? So you need some time. But regardless of what your strategy was, even if you said, this is now a super great opportunity, I want to do new deals right now, which is true, let's say, after some months, I would say, but you just didn't have the time, you didn't have the resources, because you first, of course, that's the first reaction, you support your portfolio. And so this was, of course, the same for us. So we didn't stop deal flow work. But of course, it was a little bit slower anyhow. We supported the portfolio. And then let's say after some weeks or after 2-3 months, the main kind of crisis work was done. And in our case, it was pretty positive. So none of the startups is kind of belly up or in acute danger there. So, but of course, we have to support follow-ons, financing rounds, and so on and so forth. Mm-hmm. So still some work there. And then you start normal business again, right? So then, of course, you start to look at the outside investment universe again. And then, of course, what happens is that a lot of investors are maybe a little bit shy still to invest in something where they now see an additional market risk. So coming again to the extreme, if you have something travel related and you're afraid that there is like a second or third lockdown situation, maybe you're not investing this year, right? So these things are difficult to finance right now. If you are, let's say, in less extreme segments, maybe your investors now want to kind of de-risk their investment decision a little bit by, for example, not doing an equity round with fixed valuation, but maybe just giving you a convertible so that the valuation is set next year, more or less, so they can't do a mistake valuation-wise, for example. So we see a lot of these things happening, so more convertible rounds also in later stage than usual, for example. Or also kind of, let's say, in the fine print. So you know that in a startup financing contract, you will have lots of fine print with whatever liquidation preference, vesting, drag along, tag along, and so on and so forth. And of course, maybe last year, entrepreneurs were able to negotiate more founder-friendly terms than this year, because investors try to address the additional market risk and optimize their terms. And as less investors are currently active, the fewer investors on the market can now also, of course, maybe, get a better deal here and there. But it's not, let's say, a tectonic shift. Yeah. So it's still, all the standards are still there. You see normal deals happening, but it's maybe a little bit more investor-friendly climate right now than last year.
Would you say, I guess, the overall investors landscape is now looking slightly more positive or more sort of stable with activity going up then?
I would say it's depending also on the kind of investor. So if you have, let's say, a strategic investor or a kind of a corporate venture fund, something like that, these people that maybe invest off a balance sheet and don't have a fund where they have liquidity they can easily invest in, but they have to go kind of to the CFO of the group to ask for every deal, they might be still kind of slowed down because, let's say, the group CEO still doesn't really know how the market situation will play out in his core business over the next couple of months and years. The professional funds, so if you really have a venture capital fund, so you have committed capital, you have kind of money on the bank literally, these funds can be deployed, and usually investing as a venture capitalist after a financial crisis was always a good idea. So if you just look at like 20, 30 years of data, especially in the United States, of course, you have lots of data on that, more or less the best venture deals have been done after a financial crisis. And also the funds that were active after a financial crisis, so that have been just raised before the crisis and then invested the majority of the money afterwards, or have been raised after the crisis, they are usually outperformers compared to their peers. So this is why I would say it's so-so. Yeah, professional investors are usually also not now. If you look at them, so they're in a good mood at the end of the day, right? So nobody asked for COVID-19, of course, right? So it's still tons of work and distraction, and it's, of course, everybody knows also somebody with a kind of a personal story. Yeah, so people are dying at the end of the day. So it's not a good situation, right? But still, as a professional investor, you say, if you are correctly investing, if you pick the right targets, if you optimize the terms, it's a good time to invest, right? So this is why I would say it's if you separate the investor base into kind of two teams, you see that team one, more the strategic guys, maybe are a little bit slowed down right now because they have other worries. Professional investors are pretty active. After that, we have to help our portfolio phase. They were just kind of distracted to do new deals, but that's now coming back.
And I guess personally for you and your business, is there anything which you've learned about how you operate your business? And is there any, I guess, taking that into the new norm that you're sort of going to change? I mean, obviously you mentioned about really sort of making sure you look after your portfolio companies, which, I mean, they're some pretty impressive portfolio companies, and we can obviously chat through that in a little bit. But what would you is there any advice you could give to other sort of investors out there about what you've learned pre-COVID?
So I'm doing venture capital for, let's say, like 20 years now or something. Yeah. So this is not the first situation that the market changed away, right? And it was always a good idea to, for example, be careful with your valuation. Yeah, if you are investing on a high valuation because there is maybe a small hype situation, maybe kind of the danger of a small bubble or something. If you're investing there, you will be fine, both as startup and as an investor, as long as the music plays in a way. Yeah, but if you have a down cycle, you have a big problem. Yeah, you will not have a follow-on financing round on a higher valuation. You have to accept a down round or have a flat valuation. Stuff that can kind of really have a strong problematic impact on your overall equity story, right? So, but that has always been the case, right? And it's the same situation right now. Also, as you said, supporting the portfolio company. So we spend a lot of time being a coach, being a sparring partner to the entrepreneurs. We don't want to operate and manage these companies, obviously, right? So that would be plain stupid. And we've been entrepreneurs ourselves, so we know how much distraction an investor can bring to a company that maybe out of good intentions creates ideas day by day and throws them into the CEO, and the CEO has to run after all the ideas of the investors, right? So that's also not the way how you should do it. But if there is something really, if there's a material change, if there's a big challenge, if it's also not just kind of an economic challenge. It's also usually a kind of a very emotional, very personal thing, for an entrepreneur in a situation like that. Maybe he has to lay off people, for example. He has to do hard decisions he maybe hasn't done before. And to be a coach in that situation, not because you're kind of the rocket scientist who knows everything, but you have been in these situations a couple of times before. The entrepreneur maybe is in a situation like that for the first time. So you can help him there. So I think these things are universally true and are true kind of in any of these situations. So this is also why, let's say, for a team like us who have done it before, we reacted without thinking in a way, right? So when the crisis happened, we shifted to kind of an autopilot mode. Okay, now we are in a crisis situation, so we have to do this and that. And there was no big discussion in the team what to do, right? And so after some weeks, then you had more room for discussion because you could discuss how the markets will change and how long will it take and blah, blah, blah. But the immediate things were pretty much clear, right? It's right. It's like if you're in a firefighting brigade, you don't think too much if you have an alarm call, right? So you do what you trained.
And I guess for those who are listening who say aren't too familiar with your portfolio, tell us a little bit about, I guess, what you focus on and what you look for in your portfolio for anyone who, whether they're just looking for investment or I guess would like to learn more about your portfolio.
Yes, absolutely. So basically, as you said in your introduction, so we are one of the first multi-LP financial VCs in Europe, just focusing on prop tech and construction tech. And so we really take a look at the full value chain. So it doesn't really matter if it's planning, building, financing, renting, asset management, IoT, whatsoever. So across the value chain, we're interested to support great founding teams. And we are also pretty stage agnostic. So we invested between like 200K euros and 3 million euros in the first check. And we're a little bit stage agnostic. Still, of course, the European markets are a little bit less mature maybe than the United States. So the majority of the investment universe I would still consider to be seed stage and early stage, right? So this is of course where we need to focus on because the market is not more mature currently, but it's getting more mature as we speak. And so we are always trying to avoid, let's say, hypes, because a hype means that valuations are very high. So we try to be a disciplined investor. And we always also try to kind of match if we think something is very interesting, talk to some experts, talk to some customers if they're really solving a problem. If we make our decision that this is a great case, this is a great team, it makes sense, we also really are willing to take the risk. So we can be the lead investor, we can invest before the large A round or B round and support the team in setting up the large A round, B round. So I think this is what we need to be able to do if we consider ourselves to be an expert in that segment. And of course, we can also be kind of, let's say, a scout, a Sherpa for other investors. So we like to build syndicates where maybe mainstream VCs or family offices or even whatever real estate companies can join a syndicate. So we can support the startups with larger checks and that go beyond our fund size. Yeah, so these are things that we're doing. And you have to have in mind, of course, that, let's say, Europe is not, compared to United States, as always, let's say 5 years behind, speaking of venture capital, private equity, market development. But if you assume that we have a similar development over the next couple of years and all signs are there, hopefully, we can also develop ourselves from a pretty much German-speaking player right now to a European player. So that's also on the agenda. So, and this is also reflected in the portfolio. So you will find companies that are, as I mentioned before, in that kind of boring back office IT space where we see tremendous room for efficiency increase. Companies like Architrave, for example, which is the market leader in German-speaking markets for document management systems for large asset managers. But for example, also Archilize, a Swiss startup that's doing a very, very clever kind of AI, very high-tech platform to work with kind of the data you generate from, for example, floor plans and also the 3D information you have from city models. So you can easily kind of feed the engine your floor plan and it will say, okay, if you have like window number 5, you will have sun 8 hours of the day in this or that thing, and so the cooling must be like that and stuff like that. So things that an engine can calculate, so that usually is today kind of calculated at an architect or some kind of engineering company. So these things, of course, can be automated. But we also invested, for example, in Think Technologies, so a company that has developed the most capable kind of middleware for large IoT deployments in commercial buildings. So they, for example, did this virus guard package that I mentioned before. We have invested in several construction tech companies that try to kind of industrialize, for example, energy efficiency renovation, a large topic, of course. So generally speaking, we are very, very bullish on kind of green technology because we believe that's the super major trend in a way for the next 10, 20 years. So that's what we do.
And I guess, okay, so that's what I guess you've been involved in your business. Now, Nikolas, I guess outside of investment and prop tech, what do you like doing? What are your hobbies? Anything which, I don't know, a weird hobby you've taken up over lockdown? Like I've started meditating. I guess it's not that weird. It's probably quite good for my mental sanity. But outside, tell us something which we don't know about you outside of prop tech.
Okay, so I used to do a lot of music kind of back in the school days. So I was an avid keyboard player and guitarist and stuff like that. And we did a lockdown band. So we used an online platform to connect our home studios together so that we can play as a band while being kind of quarantined in 5 different living rooms. So that was fun. So starting my music career.
Well, we're looking forward to seeing you on the big stage. Who knows? Will Glastonbury be on next year? I don't know, but I hope to see you on main stage.
Absolutely.
And I guess, so outside, is there any other industry or career that you would have liked to sort of pursue other than obviously being a famous musician?
Of course, I think a topic that most of us can relate to is digitalization, let's say, of the education industry, if you want to say so. So I have 2 small kids, and so of course for them it is hard not to go to school or not to go to kindergarten, and there the situation in Europe is still very analog, right? So you can really optimize that. It's still tough to get a school kind of to an online platform. To get even email addresses for all teachers is already a problem. So simple stuff there. So let's say besides my business life, I think I will devote some time and money, kind of as a non-profit part to support the digitization of education.
Yeah, well, we'd love to hear a little bit more about that. And I guess, unfortunately, this is coming to the end of the show. But I guess before we go, we'd love to hear about how can we find the white paper on the effect of Corona on PropTech. How can our listeners connect with you and PropTech One Ventures? We'll be sharing this all in the small print, but for those listening, could you please share that information with us?
Absolutely. So you can just go to the website, which is proptech1.ventures, and you can download all the white papers we did there for free. So that's easy. Also, if you want to contact us regarding co-investment opportunities as an investor, or if you're a startup looking for funding, or maybe you're from the real estate industry and want to learn how maybe it's possible kind of to collaborate with us as a fund, so feel free to contact me. You will find our contact data on the website. I'm also on Twitter, LinkedIn, wherever. So I guess if you just Google me, you'll find me.
Awesome. Well, look, Nikolas, it's been an absolute pleasure having you on the Propcast, and looking forward to obviously hearing, hopefully, maybe your next single coming out. But thank you so much, and hopefully we'll catch up soon.
Excellent. So I will let you know when that happens. Thanks for having me.
Awesome.
Bye-bye.
Brill. Thank you for joining us this week on the Propcast, and a big thanks to our special guests. Make sure you visit our website, www.nmre.co.uk, where you can subscribe to our show, or you'll find us on iTunes and Spotify, where all good content is found. Whilst you're at it, if you found value in the show, we'd appreciate if you could rate and review us on iTunes, or if you simply just spread the word. Be sure to tune in next Tuesday, and I'll catch you later.
You're listening to a Podcast Company podcast. This was made by Podcast Syndicator. where we help you go from start to grow to making money with your podcast. Let us help you share your message and your voice with the world. Reach out now, Jason at podcastsyndicator.com or Brett at podcastsyndicator.com to find out more. Thank you for listening, and do come back to hear nothing but the best podcasts.